So, everyone's talking about the $3 trillion club, right? You've got Apple, Microsoft, Nvidia. It's getting a little crowded up there. But let's look past that. Let's ask a much, much bigger question.
Yep, you heard that right. $10 trillion. It's a number that just sounds wild, doesn't it? But, in the world of big tech, what seems impossible one day is pretty much inevitable the next. So who's going to get there first?
Well, here's where it gets interesting. It's probably not the company that's all over the news right now. The real contender, the one we're talking about today, has been hiding its true power right out in the open.
That's right. Our pick for the first $10 trillion company is Amazon. And I know I can practically hear what you're thinking right now.
And you're not wrong. For years, the whole story around Amazon was that their retail business barely broke even. But that's just the story on the surface. To really get the path to $10 trillion, you've got to look at the incredibly profitable businesses they've built right on top of that retail machine.
So this is the key. The real Amazon growth story isn't about selling you a book or a new gadget anymore. It's all about these high-margin layers they've stacked on top. Let's peel back the first one.
Prime, think about it. It started out as just a simple perk for 2-day shipping. Now, it's a full-blown subscription fortress. This isn't just one-time revenue. This is sticky, recurring, high-margin cash that pretty much drops straight to the bottom line. So, just how big is it? In the last year, subscriptions raked in $43 billion. Now, to give you some perspective, just 10 years ago, that number was less than $3 billion. That is just explosive growth for what's basically a loyalty program. And believe it or not, this is just the beginning. Let's look at the next layer.
Amazon's advertising business. Seriously, every single time you search for something on their website, you're looking at one of the most powerful ad platforms in the world. Companies are paying big bucks to get their products at the top of your search results. And that revenue? Well, it's a complete goldmine.
We're talking $54 billion a year, just from ads. Think about that for a second. That is more than the total revenue of a ton of Fortune 500 companies. And for Amazon, it's the super high-margin business they just bolted onto their e-commerce site.
Okay, let that number sink in. You just add Prime and advertising together, and you're looking at almost $100 billion in potential earnings. And that's before you even count a single penny from them selling actual stuff. With the way they're growing, that could easily be 150, maybe even 200 billion in the next decade. But even that is not the main event.
No, the real engine, the absolute beast behind this whole $10 trillion idea is, of course, Amazon Web Services, AWS. It is the true powerhouse of the company, and honestly, it's one of the most profitable business ventures on the entire planet.
And this chart just says it all, doesn't it? Over here, you've got the retail business with its tiny razor-thin margins. We're talking low single digits. And then over here, you have AWS with a massive 36% profit margin. It's not even in the same league. This is where the real money is made.
And here's the rocket fuel. The explosion in artificial intelligence is creating just an unbelievable demand for cloud computing. Every single AI model, every new app, it all needs to run somewhere. And that somewhere is the cloud. AWS is sitting right in the middle of this massive boom.
So get this. Analysts are predicting the whole cloud computing market is going to grow at a crazy 22% a year, every year through 2030. That's just sustained, massive growth for the rest of the decade. So if AWS just hangs on to its market share, we could see it pulling in over $100 billion in earnings all by itself. A real triple-digit profit machine.
Okay, so you've got these incredible profit engines. How do we actually get from here to that $10 trillion number? Let's do the math. It's actually a lot simpler than you might think.
All right, let's break it down. Step 1. You take the earnings potential from AWS, you add in advertising and subscriptions, and you can very realistically see Amazon hitting $300 billion in annual earnings by 2030. Step 2. Our target is that $10 trillion market cap. So, step 3. You just divide that $10 trillion by the $300 billion in earnings, and you get a price-to-earnings ratio, a PE of 33.
Now, you might be wondering, is a PE of 33 just wishful thinking? Not at all. Look at this. Apple and Microsoft are already trading at PE ratios higher than that right now. And with Amazon's margins growing so fast, a valuation of 33 times earnings actually seems pretty reasonable. But there is one big elephant in the room we have to talk about: the founder himself.
We've all seen the headlines, right?
Jeff Bezos is selling billions and billions of dollars of Amazon stock. And that's a fair thing to worry about. I mean, is the guy who built the company losing faith in it? Let's actually look at the facts.
Now, what's really important to see here is the timeline. Back at the IPO in 1997, Bezos owned 43% of Amazon. Today, he's down to around 9%. So, you see, this isn't some sudden fire sale. It's been a very gradual process over decades for a founder who, remember, already stepped down as CEO back in 2021.
And the reasons for the selling actually make a lot of sense. He's funding his other huge projects, like his space company, Blue Origin. He's also doing massive amounts of philanthropy. And let's be real, his lifestyle costs a pretty penny. That $500 million super yacht isn't going to pay for itself. Plus, there are all those rumors about him wanting to buy an NFL team, which would cost billions.
So here's the bottom line. This is a founder who's in a totally new phase of his life. This is about getting cash for his next big adventures, not a sign that he doesn't believe in the company he spent nearly 30 years building.
So when you really put all the pieces together, you've got the hidden profit machines and subscriptions and ads, you've got the AI-fueled powerhouse of AWS, and you have a valuation that actually makes sense compared to its peers, the path starts to look pretty clear. The question really isn't if a company will hit 10 trillion anymore, it's who. And you got to admit, Amazon makes a really powerful case. What do you guys think?